Welcome to Kenya Market Daily Podcast. Today we're taking a really crucial deep dive into the latest market and economic data. We'll be focusing specifically on the Nairobi Stock Exchange and some of Kenya's biggest companies. We're talking Safaricom, KCB Group, Equity, Co-op Bank, Kenya Power, ABSA, CIC, and BAT Kenya. Our goal today is to pull out the key insights, stock performance, what the analysts are saying, plus the bigger economic picture, both here and globally, all to help you really get a handle on what's shaping things right now.
That's exactly right. We're essentially sifting through a pile of reports, connecting those dots, and aiming to give you a clear view of what's truly important for navigating the financial scene in Kenya and how it links to the wider world. Think of it as getting you up to speed quickly without getting lost in all the noise.
Okay, so let's kick things off with the Nairobi equity market itself. June 24th, 2025 looked like a pretty bullish day, didn't it? The Nairobi All-Share Index, the NASI, ticked up 1.2% to close at 147.49.
It did. And that push came mainly from the big players, the large cap stocks. We saw East African breweries jump 4.6%, Cooperative Bank of Kenya up 2.1%, KCB Group gained 1.0%, and Safaricom saw a 0.6% rise.
So the heavy hitters were definitely pulling their weight.
Exactly. When these major companies move positively, it really lifts the whole index. It signals strong investor confidence in those established names.
And it wasn't just prices moving. The activity level, the trading volume was just, wow. Equity turnover shot up 111.7%.
An incredible jump, yes. Up to KES 315.03 million from about 148.8 million the day before.
What does a surge like that really signal? More than just movement, right?
Oh, absolutely. It signals much more. It points to renewed investor interest, definite confidence, and really robust liquidity on the market. It means buyers and sellers were finding each other easily. That boost in turnover also pushed up the market capitalization by 1.2% to KES 2,323.37 million.
So the total value of the market grew significantly.
Precisely. And other key indices followed suit. The NSE 10 was up 1.3%, NSE 20 up 0.6%, NSE 25 up 0.9%. It was broad-based positivity.
Now, foreign investor activity often tells an interesting story, and yesterday saw a big shift there too.
A huge shift. Foreign investors flipped from being net sellers to net buyers. They recorded net inflows of KES 55.58 million.
That's quite a turnaround from the KES 15.66 million net outflows the previous session.
It really is, and the numbers behind it are dramatic. Foreigner buys absolutely skyrocketed, up 309.1% to KES 120.24 million.
9,000%.
Yeah, staggering. Now, foreigner sales also rose by 281.7% to KES 64.65 million, but the buying just completely overwhelmed the selling. It shows international players seeing real value here.
But locals were still the main drivers.
Correct. The participation mix was about 70.6% local versus 29.4% foreign. So domestic liquidity is still absolutely vital for the market's health.
Okay, great overview. Let's drill down now into some of those specific companies. Who saw the most action?
Well, the most traded counter was, unsurprisingly perhaps, Safaricom. It had an aggregate turnover of KES 134.84 million and closed at KES 24.05. Interestingly, it was big on both sides for foreigners, KES 108.70 million in buys, but also KES 22.66 million in sales. High interest all around.
That's a lot of tension on Safaricom.
What about the banks? KCB Group.
KCB Group was the second most traded, turnover of KES 39.20 million, closing at KES 44.00, and the analysts, they have a clear BUY on KCB, seeing a potential upside of almost 22%.
21.9% upside. That's pretty strong. What's the reasoning?
Two key things. First, their planned entry into Ethiopia. Huge market, largely underbanked, massive potential there. Second, the recent sale of National Bank of Kenya, NBK, to Access Bank. That's set to really strengthen KCB's balance sheet.
Right, freeing up capital.
Exactly, allowing them to issue more credit, which should boost interest income. Though it's worth noting KCB was also a top foreigner sale at KES 22.22 million, so some profit-taking or rebalancing perhaps.
Interesting dynamic. And how about Equity and Co-op Bank? Equity Group saw KES 16.67 million in turnover, closing at KES 46.50. It was also a top foreigner buy with KES 6.79 million coming in. Shows continued international backing. Cooperative Bank had turnover of KES 22.43 million, closing at KES 17.00. And like KCB, it was also a top foreigner sale, seeing KES 11.65 million in outflows.
So mixed foreign sentiment across the major banks, but still significant activity.
Definitely. They remain central pillars of the market.
And Kenya Power, KPLC, critical utility.
KPLC closed at KES 9.06. It also saw some foreign action, KES 4.22 million in buys and KES 2.34 million in sales. No specific analyst recommendation in today's reports, but its presence on both buy and sell lists shows investors are watching it, likely due to its essential role in ongoing operational efforts.
Okay, got it. Now let's look at some other companies where analysts did give specific recommendations. What stands out there?
Right, first, ABSA Bank Kenya. It actually dragged the market slightly, down 0.3%, but it still gets a BUY recommendation. Analysts see a 14.5% upside potential, targeting KES 21.42 from the current KES 18.7.
Why the confidence despite the slight dip?
It comes down to robust subsidiary expansion, a resilient asset management arm, good operational efficiency driving margins, and solid loan growth helped by attractive rates and digital platforms like Timisa. Seems like a solid foundation. Then there's CIC Insurance Group, also down slightly, 1.4%, but again, a BUY recommendation. Smaller upside here, 4.7%, targeting KES 2.90 from KES 2.77. Growth is expected from prudent investments and a solid underwriting business.
Any caveats?
Yeah, the report notes its dividend yield is a bit modest compared to the industry average, something for income investors to consider.
Makes sense.
Who else? Biat Kenya. Strong BUY here, with a significant 23.6% upside potential. Target price KDS 4306.30 from the current KES 358.00.
And the reasons for that strong outlook?
A few things. Their progressive dividend policy is attractive, cost pressures seem to be stabilizing, which could boost margins, and they're seeing organic consumer growth driving revenues. A healthy picture overall.
Okay, and any sell recommendations?
Yes. Longhorn Publishers Pulsa and analysts recommend sell, seeing no upside potential. The target price of TES 2.65 matches the current price.
Why the negative view?
It seems they're facing multiple headwinds. Impairment losses from curriculum changes, ongoing struggles with book piracy and the secondhand market, plus reduced consumer spending on textbooks. A tough spot for them.
A really useful breakdown of those analyst calls. Now, stepping back slightly, were there any other major movers on the day? Big winners or losers?
Oh, yes. The absolute standout gainer was UMAM. It surged an incredible 55.9% to close at KES 19.25.
55.9%. What caused that?
A dividend announcement. They declared an interim dividend of USH222, which is about KES 7.95 per share. That really spurred investor appetite, especially with the book closure date set for July 14th.
Dividends can certainly move the needle.
Any others?
Other top gainers were Standard Group up 8.7% and BOC Kenya up 8.2%. But it wasn't all gains. The market was pulled back a bit by losses in Jubilee Holdings, down 9.4%, Crown Paints down 9.1%, and East African Portland Cement down 8.7%. Shows the usual market mix.
And any major capital market news impacting trading. Suspensions, perhaps. Yes, a significant one. The CMA indefinitely suspended trading in shares of TransCentury Limited, TCL, and its subsidiary East African Cables.
Why the suspension?
It follows Equity Bank seizing both companies last week over an unpaid debt of SH 4.74 billion. TransCentury is now in receivership, and East African Cables is under administration.
That's serious. So trading is frozen for shareholders.
Exactly. It highlights the risks tied to corporate debt and financial distress and directly impacts those holding the shares.
A stark reminder. Okay, let's broaden the view again to the wider Kenyan economy and government actions influencing the market. What's happening there?
Well, first, the government's housing agenda. There's a plan to raise an extra SH 129 billion via the NSE. They'll use Sukuk bonds, those are Sharia-compliant, asset-backed securities for SH 21 billion, and then REITs, real estate investment trusts, for the rest, all for the affordable housing program.
Interesting approach, but didn't they already collect a lot from the housing levy?
That's the intriguing part, yes. About SH 120 billion collected so far is reportedly largely unabsorbed, just sitting in Treasury bills.
So they need more money, even though the collective funds aren't fully deployed yet.
Apparently so. Even with SH 300 billion worth of contracts supposedly signed by developers, it does raise questions about the flow of funds and project execution speed. Might be a bottleneck.
Definitely something to watch. What about government spending? Staying on budget?
Not quite. We're seeing significant budget overruns. State House, Social Protection, and Sports departments have exceeded their full-year budgets by nearly 9.43 billion in just the first 11 months.
Wow. Any specifics?
Social protection overspent by about SH 6.47 billion. State House went over by SH 1.46 billion. And sports overspent by almost SH 1.5 billion, largely linked to hosting the upcoming African Nations Championship, CHAN.
Suggests some challenges in fiscal management or forecasting.
It certainly points that way, puts extra strain on public finances.
And related to that, how is the Treasury doing on tax collection targets?
They've had to lower expectations again. It signals that economic activity might be slowing down more than anticipated. Tax receipts grew only 4.28% to SH 2.01 trillion in the 11 months to May. That's way down from the nearly 11% growth seen in the previous year.
What reasons are they giving?
They're citing ambitious targets combined with headwinds like high borrowing costs and the government's own delays in paying suppliers, which obviously dampens economic activity. It impacts the government's ability to fund things.
Right, a ripple effect. Lastly, any new regulations affecting key sectors like energy, the crude oil push?
Yes, Kenya published new crude oil rules that proposed petroleum, midstream crude oil, and natural gas pipeline and storage operations, regulations 2025. It details the fees. SH 2 million for a construction permit for pipelines and storage, valid for 5 years, another SH 2 million to operate them, and SH 1 million for renewals.
So setting the stage for commercialization.
Exactly. It signals a clear push to formalize and encourage investment in that midstream infrastructure. Could be a new phase for Kenya's energy sector.
Okay, let's quickly glance at the global markets. Did they share Kenya's positive mood?
They absolutely did. It was a widespread rally on June 24th. In the U.S., the S&P 500, NASDAQ, and Dow were all up around 0.9% to 1%. Europe saw gains too, FTSE 100 up 0.4%, Germany's DAX up a strong 1.8%, and Asia joined in. Japan's Nikkei up 1.1%, China's Shanghai Composite up 1.2%, pretty much green across the board.
What was driving that global optimism? Anything specific?
Actually, yes, and it was quite surprising. Not typical economic data. The main driver appeared to be an announcement from U.S. President Trump that Israel and Iran had apparently approached him about a potential ceasefire.
Ah, so geopolitical relief.
Precisely. The prospect of a major conflict easing seemed to lift investor confidence significantly, reducing uncertainty. It just shows how interconnected everything is, global politics impacting market sentiment everywhere.
Definitely. And any standout global stock movers?
Yeah, a couple caught the eye. Tesla Inc. had a big gain, up 8.2%. On the other end, Hims & Hers Health Inc. took a sharp dive, down 34.6%. And NVIDIA, the chip giant, continued its climb, up a modest Versa at 0.2%.
So bringing it all together, the activity in Kenya's market, the government's financial maneuvers, these global ripples, it really highlights constant change and how linked everything is.
It really does, and it prompts a thought, doesn't it? How do all these daily shifts from a local dividend payment to talk of ceasefires overseas actually reshape investment strategies and financial decisions, not just for the big institutions, but for individual investors, for you listening right now? What does all this mean for how you understand the market and plan your own financial path?
A very important question to reflect on. Thank you for joining us on this deep dive into today's market intelligence.
And remember, you can follow our channel on social media. The links are right there in the podcast description for more insights and ongoing discussion.
Absolutely. And please do subscribe to Kenya Market Daily Podcast wherever you get your podcast. Stay informed with us on the financial insights that truly matter. We'll catch you in the next deep dive.